Good afternoon, everyone. Welcome to today's discussion with Matthew Wright, founder, president, and chief investment officer of Disciplina, and Joe Hawax, managing director of Wespath. I'm Simon Siegel, one of the senior advisors at Chestnut, and together with our founder and CEO, Amanda Tepper, we'll be speaking with Matt and Joe today. As many of you know, at Chestnut, we're a management consulting firm that works exclusively with asset managers. We work with a wide range of asset managers, including OCIOs like our guests today. And our practice areas include distribution and growth strategy, thought leadership, sales coaching and development, as well as custom market research. A little housekeeping before the main event. Many of you have told us you like the brief length of our webinars, and we give that same guidance to our clients. We tell them less is more. That said, because we've got two guests today, today's webinar is going to last roughly 40 to 45 minutes. To keep within that time frame, we'll take any of your questions offline. If you have questions, there's three ways to get them to us. You can reach out to any one of us directly if you know our email address. You can send an email to info@chestnutadvisory.com, or you can type a question in the chat box at the bottom of the screen. One of us will get back to you after the webinar. Now, to today's topic. Over the past several months, we've interviewed leaders from many very large OCIO providers. We thought it would be interesting to meet with the leaders of two outstanding boutique OCIOs to understand how they work with the clients, how they interact with and source investment managers for parts of their portfolios. We found it interesting to get to know them, to learn their approaches to all aspects of their business and see how they're different from the other firms we've showcased. And of course, this includes their approach to the investment managers they consider hiring as well. So we hope you find this to be an interesting topic too. With that, let me turn things over to Amanda.
Thank you, Simon, and welcome to everyone who's taken the time to join us today. I'm very pleased that Joe Hawax, head of institutional investment services at Wespath, has agreed to speak with us today. While many firms say they're unique, in fact, I think every firm says they're unique, I can tell you from my own firsthand experience that there's no other OCIO provider out there quite like Wespath. And they're really lucky to have Joe there leading their go-to-market efforts, a role he's held for several years now. Welcome, Joe.
Thanks, Amanda. And thanks for our friends at Disciplina for sharing the stage today. So I think I'll kick it off by just saying a little bit about Wespath. So Wespath Institutional Investments, we're the institutional arm stemming from the Methodist Church. So Wespath broadly manages about $25 billion, $21 billion for the 100,000 participants, and $4 billion for the 140 institutional clients that we have. So with the vast majority of the 140 institutional clients, we have all the assets, and we would operate in what we call a hybrid OCIO strategy, meaning that we advise on the asset allocation, we help write the IPS, and we do all the manager selection. However, we don't make decisions without consulting the client. So, for example, we wouldn't change an asset allocation independently. We would decide that with the client. Managers we would change, yes, but asset allocation, no. So for transparency, we make sure to define our OCIO services that way.
Yeah, that makes a lot of sense. So just to be crystal clear, Wespath is a nonprofit whose clients are exclusively faith-based nonprofits. Is that right?
That's right. So it is unique about us. We are a 501c3, and all of our clients are 501c3s. So we think we understand the space quite well, and we have a business model that supports this faith-based, 501c3 niche. In my experience, the mission-based organizations have unique priorities, and they also benefit from a strong service model. So in terms of something that would also be unique with our model is if you look at the clients we serve here, they're all faith-based 501c3s, as I mentioned, and this makes sense given our roots in the church. So the largest segment is foundations, where we have a strong offering and a support model, and I believe very happy clients. In the future, we expect to grow into the college and healthcare space. But on the note about happy clients, since our inception, our retention rate is over 99%. It's a record that we're proud of, and certainly one that we're going to work very hard to maintain, and in focusing on our clients' needs.
Wow, 99%, that's terrific. Thanks, Joe. It's now my pleasure to introduce our other guest, Matthew Wright, the founder, president, and chief investment officer of Disciplina Capital Management. Matt founded Disciplina in 2013 as a diverse employee-owned OCIO focused on not-for-profit organizations. And before he founded Disciplina, Matt was the vice chancellor for investments and chief investment officer of Vanderbilt University, where he built and led a 20-person team responsible for investment oversight of the university's $4 billion. Prior to Vanderbilt, Matt was director of investments at Emory, and he's held other senior positions as well, as you can see from his bio here. So welcome, Matt.
Thank you, Simon, and I want to thank you, Amanda, for inviting Disciplina to participate in this webinar, and also want to thank Joe for partnering with me on this webinar as well. Yeah, our firm is really focused on the not-for-profit space, and that really stems from our background working at two pretty sizable not-for-profit institutions, and we focus in delivering solutions that are customized and meeting their needs to hopefully further their mission in a way that gives them the capacity and scale of a billion-dollar institution, although their size is much smaller.
Thanks, Matt. I'm going to ask you our first question, and then I'd also like to hear Joe's thoughts on this afterwards. So, being a boutique rather than a global giant, or sometimes I like to call them intergalactic firms, how does that help you, and how does that help your clients?
Sure. Well, first I'd like to define what boutique means, because that term is thrown around. And what it really means, or our definition of it, is really an employee-owned service provider whose background and experience has primarily stemmed from working within an institution, in our case, Emory and Vanderbilt University. In other instances, it could be other not-for-profits, whether they be on the healthcare side, faith-based side, or what have you. But individuals and personnel that have had that direct experience within those organizations. In addition to that, boutique organizations tend to be very focused on capacity so that they can provide a high-touch service model to the end clients with tailored solutions and within an open architecture framework, so they're not biased by putting forth products that are proprietary in-house products or some other means. And then for the final piece of it, by being a boutique organization focused on the OCIO model, there's no conflict of commitment or capacity. So we can assure our clients are getting access to our best ideas across their entire portfolios and not limiting that to a subset.
Yep, and when we were talking about this before the webinar and preparing, you used a great analogy about restaurants and fine dining. Can you take us through that?
Sure, Amanda. Thanks for reminding me of that. It's funny, we've been practitioners, and, one of the goals that we have is how do we communicate who we are and what we do. And it really dawned upon me one day is that a boutique should be like a fine dining experience, whereby it's a smaller restaurant. You probably haven't heard of it on a national scale in terms of its name. The people within the restaurant, the chefs in particular, have probably been trained at some of the best restaurants in the world. And they give you a very, very high touch quality experience whereby the chef himself will probably pick out the fruits and vegetables on a weekly basis in terms of making that purchase. And we would say that's analogous to the managers that we pick. They'll be very, very particular in terms of the staff that they surround themselves with. And they'll even have, quite frankly, come around the restaurant during mealtime and actually chat with the actual patrons of the restaurant. That's the model that we want to deliver for our clients, and I think it's typical of the boutique model. That's not to say that a restaurant like Olive Garden isn't a great restaurant. My kids love that restaurant. We always know what we can expect there, the breadsticks, the salads, and then a fine meal. But, if we actually think back to some of our most memorable experiences as we've traveled, it's always been that fine dining experience, that niche restaurant where there's been that high touch, and the experience has been far different than the experience that we've had at the larger kind of chain restaurants.
Yeah, I think that makes a ton of sense. And of course, it just depends on what kind of experience the end client is looking for, right?
Absolutely.
So following that analogy a bit further, it can be hard sometimes to get a reservation at a fine dining establishment, right?
That is true.
A good one, right? You can only serve a limited number of eaters every evening. So how are you dealing with or planning to deal with the capacity issue at Disciplina?
Well, that's a great question. We spent a lot of time before we actually officially launched and went out to market, and actually networked with a number of other boutique OCIO providers. And the main takeaway is that you have to recognize that your capacity is going to be constrained. Our goal is really to target anywhere between 40 and 50 clients at maximum capacity, and that affords us the opportunity for each senior partner / investment professional to have a personal relationship with at least 10 to 12 clients. And that interaction is pretty deep. Obviously, that entails interacting with the board, the staff, but also their service providers, development officers, even people further down in the organization that people at a senior level at a much larger organization wouldn't interact with. And that creates what we hope is an unparalleled experience in terms of delivering on their mission. We have found, some of the feedback that we've gotten from our clients is that, that tailored approach and really personalized touch has made, quite frankly, an area that many of them aren't, experts in, that much more understandable and easier to navigate as we manage their investment portfolios.
As one of the things I enjoyed about our process pulling this webinar together and getting to know you is that you and I are both founders of businesses, and as such you wear a lot of hats, and we were talking about how you put together your team and your high degree of intentionality of how you're delivering to your clients. Can you just talk about that for a minute?
Sure. When you are employee owned and an entrepreneurial team, every individual that, we can't say this now because we don't have a physical space, we're all remote, but every person that walks in the door is a reflection of yourself and what you want to present to the marketplace. So we look for individuals, obviously, that have a lot of expertise in terms of investment acumen, but are very, very relatable, and then have a breadth of knowledge in a number of areas. Because again, as we interact with our clients, the range of conversations can go anything from, asset allocation to modeling to investment service providers to audit discussions to individual managers to macro environment. It can go a breadth and a range of different areas, and we have to demonstrate a level of competency across these areas for the benefit of our clients. We don't want to have a model whereby, someone always says, we'll get back to you, and it goes into a vacuum where that client's need is not being met.
Yeah, that makes a ton of sense. So Joe, let me turn to you. How about Wespath? In what ways does being a boutique help your clients?
Yeah, thanks, Anna. That's a great question. There's certainly advantages to working with a boutique OCIO provider, and there's some obvious ones, right? It's not a large bureaucracy, so certainly can be easier to get things done. Every client is very meaningful to us, and the experience, we hope, with our retention rate, supports that. And we have a focused business model. So instead of trying to boil the ocean, we want to add a lot of value to this core client base, and to that point. So we're not focused on, say, public funds or local fire and police pensions with unique and strict rules. Coming from Illinois, I can tell you they're very strict rules and very unique asset pools. We focus on an investment product and a service model that supports faith-based nonprofits, and we think that brings a lot of value to clients. And And secondly, I think we align our business model to their needs, right? We really tried to be an extension of their office. So the perfect example for that would be, say, a $70 million foundation with 2 or 3 staff members. And they have a need to use many of our firm's resources. And we're able to help them with their investments, but also really to help them with their entire business.
Yeah, I think that's something that a lot of newcomers to the OCIO space have learned to their maybe sometimes surprise, and we're seeing that. We talked about that in one of our other recent webinars of OCIO 2.0, because the first wave of hiring OCIOs was really all about outsourcing just the investment part, and clients really need a lot more than that to be happy with an OCIO over time. Clients can be demanding, and one of the benefits that we talked about that I know your team runs themselves, hopefully not completely ragged on, is really giving a lot of client access. So can you talk about that a little bit, Joe?
Yeah, sure. So in a large institution, it's certainly, it could be easy to get lost in the shuffle. So when you work with a boutique like a Wespath, you're going to have access to the most senior portfolio managers, decision makers, Dave Zellner, our chief investment officer himself, and the service team. Service team is going to know you. They're going to know all of your team, and they're going to work very hard to make your life easier. So going back to Matthew's analogy on dining, investing at Wespath, certainly one of those kinds of dining options, right? So if you desire, high touch model with a focus on sustainability, like you can see here in this slide, and a great deal of access, we're a really good option for you. And I think, there's alignment, and Matthew mentioned it partly in being a boutique and ownership structure. I think another way to achieve alignment is mission alignment, right? So given our client base, we tend to be very aligned in mission.
Yeah, and of course that goes all the way to the heart of your strength in sustainable and ESG. And I know you guys have published a lot of thought leadership on this, a lot of articles. Your investment team members speak on ESG at a lot of conferences. So can you talk to both the sustainability in your business and how that brings you clients? For instance, you guys were an original signatory of PRI, and the content that you put out and how that helps your business. Right.
So yeah, I agree. That's a very unique thing about Wespath. One of the main reasons that I joined was, to come work for, a mission-based organization, someone that has, the roots in sustainability. As you mentioned, we are an original signatory for the UNPRI back in 2006. So sustainable investing has its roots in the church. We like to say it's part of our DNA. And we're seeking to make a positive financial impact for clients on their portfolios, but also in the world that we live in. So the financial success and our global sustainable vision that we have, these aren't mutually exclusive. We're looking to achieve these at the same time. So we like to say we have the privilege of managing a large pool of assets, and we use that large pool isn't it really an advantage to help support that sustainable mission, working with global leaders, such as PRI or other global organizations, and there can be strength in numbers with that. So for Wespath, it's important that we lead. As my boss Dave Zellner likes to say, we choose to lead, and we believe there's a lot of benefits to our clients in choosing to lead an area of sustainability. And we believe that's one of the main factors why clients choose to work with Wespath for their investment portfolios.
And you guys communicate about that all the time, every quarter, every month. You're putting out a lot of content, and that's how you become known for this. This page has a lot of numbers on it, which is one way of measuring, and you guys do a good job of tying the numbers to the actual themes and efforts. And, I would agree with the importance of thought leadership. So we did some research on that recently with pensions and investments, that it is indeed a huge driver of business for OCIOs and asset managers. So this was a research, like I said, we did with P&I, and we talked to, among others, OCIO search consultants and consultants, as well as plan sponsors, endowments, et cetera. So 60% of respondents are asking for samples of thought leadership as part of the RFP for any new mandate, and the importance of manager thought leadership in hiring decisions. It's very high, as you can see here. We didn't put on this slide, but if you look at endowments and foundations, it's much higher. So getting back to being mission driven and having that alignment makes a lot of sense. I'd like to turn it over to, we did another piece of research. Simon, can you walk us through this?
Sure, Amanda. Happy to. So the research on this slide is what makes thought leadership great. And what we did was we asked investors and consultants and OCIOs to rank all the different features of thought leadership to see which ones rank the best of being great. And as you can see, the number one important thing that makes thought leadership great is that it contains actionable insights for the readers. So what does that mean? It means that the thought leadership is meaningful for the target investor. It speaks to what's important to them. In other words, it puts the investment manager in what we call the golden circle. And if you've been attending these webinars, right now you're expecting to see a slide of the golden circle, but you're not going to. We're not doing that to you again. Yeah, right. It puts you there, and the golden circle is the place that connects to why the investor should act and why they should hire you. And you need to get there to get hired. I think the other thing that the research here shows that's worth noting is the number two characteristic of great thought leadership. It's clear and concise. It is so much harder to write a one-page piece than a 5-page paper on the same subject. But it is really worth the effort because the one-page piece has a much better chance of getting read. 5-page piece goes in the garbage can or the delete. So, that's what our research tells us. That's what we try and practice with our clients. Matt, what about Disciplina? How do you get your message out to clients and prospective clients in your market niche?
Yeah, this is something that's right down our alley in terms of how we communicate to our clients. I think our industry has a lot of bright people and there's a lot of content and information, and we've pivoted to focus to make sure that it's clear, concise, and actionable. What we do on a monthly basis with our clients is we provide them a report, and it's not a statement. And it's not a listing of, the PE across various different geographies and markets. It's a brief summary of the various different markets represented within their portfolio, global equities, fixed income, and some alternative areas. And then we speak to how they actually did. And that allows them to make the connection between the market's movements and the performance within their portfolio. And we touch also on terms of, their adherence to policy. So it's very, very important because now they have an understanding and there's an openness. And if there's any other information that they need, we're approachable now. If you deliver, as in the old days, we would say a telephone book or a voluminous amount of information to them, you're basically just intimidating them and sending a message that you're not necessarily of the mindset of having a dialogue about their portfolio. The other thing that we do with our clients in terms of communication, we typically have quarterly meetings with our clients where we actually meet with either their committee or their board. And we do the same thing in terms of presenting their portfolio in a concise manner, and then also highlighting the market dynamics and the outlooks and how they relate to positioning within their portfolio. The final piece sorry.
Sorry, go ahead. Go ahead, Matt.
And then the final thing that we do is we put together a quarterly piece, which is led by our strategist, Brian Arsenal, whereby we comment briefly on the market's overall performance on the quarter and year-to-date basis, but we try to bring some kind of strategic topic of relevance that they may be seeing in the marketplace to give them an opportunity to better understand our view on that matter and whether or not it's something that is actionable for their investment portfolio.
Sorry, Matt.
No problem.
So that's a good comprehensive, I would say what you just described is a good comprehensive communications package. And for your clients and prospects. You also recently published a pretty different piece of thought leadership called Looking for the Next Branch Rickey. And you talk about diversity in our industry. So what's been the reaction to that?
We've got a favorable response from that. We are a minority and women-owned firm. We are a diverse team, and that is intentional. That is just part of our DNA, but it's not something that we've presented forward. It's just who we are. But given the social unrest and given some of the dislocations within the marketplace, and given the years that we have been in the business, we thought it was a responsibility for our firm to put forward a statement of highlighting the limited degree of diversity in terms of ownership and operations and participants within the asset management industry. And thus far, it's been very, very well received. We've gotten feedback from our clients, and we've gotten feedback from our network of folks within the industry. The piece can be found on our website if anyone has an interest of taking a look at it.
And I think as well, is it not so that Disciplina has a commitment to other minority and women-owned firms as well?
Yes, we do. And, it's interesting. We are not seeking minority and women-owned firms just because they're minority and women-owned firms. It really comes out of our DNA. And it's a byproduct of our E&F backgrounds of working at Vanderbilt and Emory University, whereby a portion of our compensation was based upon how we performed against other institutions. And that process entailed us doing deep due diligence, as we've always done, but also doing that deep due diligence with a high level of conviction that we could actually identify capacity constrained managers before they closed, so we could have a meaningful allocation in it, would move the needle in performance. And the empirical evidence has shown that that process lends itself to allocating capital to minority and women-owned firms that have, quite frankly, done very, very well in their respective investment strategies and peer groups in terms of their relative performance. So we're very, very proud of the fact that through our background and through our prior experiences, we've been able to take a process, a repeatable one, a stringent one, and a rigorous one that can be applied to this unique universe of investment firms across all asset classes.
It's a real win-win. It's a win for the clients,
yeah, no,
win for
most
the
definitely.
firms. Excellent. That's excellent. And that brings us really to the question that many of today's attendees are, of course, waiting for us to ask. How do your firms as boutiques with specific client niches and your unique cultures interact with investment management firms? What are you looking for in investment managers today to include in your portfolios? So Matt, why don't we continue with you on that?
Sure. So, we're a boutique firm, and we have a bit of a bias of also focusing on boutique investment management firms. We feel as though these managers are best positioned to provide value add within their respective areas of focus. That is through an employee ownership alignment of interest structure, a capacity constraint in terms of how much dollars they will manage or number of clients that they will actually have. And then also it provides us direct access to senior members of the investment team in the firm. So typically we're interfacing ultimately with the head portfolio manager or the founder of these respective firms. And we feel as though that level of transparency and touch gives us a very, very clear understanding of the performance drivers of returns and strengthens our ability to commit long-term to these relationships by being closely linked and closely partnered with these firms. You could argue that that model is very akin to the endowment model, and it is. I mean, that's our background that we come from. So we apply this by and large. The other thing that I would mention too is that we often focus our manager search efforts on areas that have demonstrated an appreciable degree of value add through manager selection. Quite frankly, we do not do a lot of work in areas like large cap equities or core fixed income. We passively allocate to those areas, but there are sectors within the fixed income space, or as we dovetail into alternatives or smaller capitalization or go out on the credit spectrum, whereby we have been able to identify talent using our model that has shown differentiated performance. And we feel that's a win-win for our client portfolios as we balance the cost of implementation with the probability, hopefully a high one, of generating value add returns.
So how does a manager with the characteristics you're looking for get onto Disciplina's radar?
Sure. So we have a proprietary database which we've been compiling for about 20 years now, and it's plain and simple. You can reach us at info@disciplina.com. You can call our office. Our number's listed on the website, and we go through the arduous process, whether it be myself or another member of our investment team, where we receive your information, we review your information for its applicability, and then we typically communicate back and say, okay, please, update us regularly so we can start to monitor your performance and see whether or not our kind of investment thesis around what you're doing matches our expectations in various different market environments.
Thanks, Matt. That was very brave of you to throw out an email address. I suspect you're going to have some submissions later today.
Okay.
So Joe, I'd like to turn to you. I know your investment team has been incredibly stable, as has your manager roster for the most part. You recently made a great addition to your investment team, bringing on Trish Halper as Deputy CIO. Can you talk a bit about how Trish and Dave and the team and overall at Wespath, how you approach manager selection?
Sure. So Wespath works with roughly 40 outside managers and creates the Wespath funds. So it'd be similar to, say, the Aon model. So again, Wespath creates these funds with external managers for our clients. Our manager research function, it probably looks pretty similar to the industry. We have our Chief Investment Officer, Dave Zellner, who oversees the entire investment function. And then Trish, who's just joined us, is Deputy Chief Investment Officer. And then we have heads of each asset class. So public equity, fixed income, private equity and real estate. And then also our internally managed positive social purpose lending platform, which is a direct impact lending portfolio. So these asset class heads manage the existing and also prospective manager relationships. And in terms of relationships, we have relationships with some of the largest industry household names, but also smaller boutique managers as well. So where we're different is we don't have a formal rating system that says if you're below benchmark for 3 quarters, you're on watch, and then the 4th quarter, you're replaced. So performance is obviously very important to us, but we retain flexibility on managers and we monitor several drivers. And the other way that we're different is, we like to think that, we certainly invest through the cycle with managers. So we understand that there are times they're going to underperform and we evaluate why. So we build very long-term, very strong relationships. I'll highlight 2. So there's 2 we've had since roughly 1994. And the first is Brown Cap in Baltimore, which manages US small cap for us. And the second is Everbergen in Seattle for all cap. So these are very strong and very long-term relationships. But our team welcomes calls. We meet with hundreds of managers a year. I'll mention in terms of any portfolio activity, earlier this year, we invested in a credit dislocation strategy to take advantage of that very narrow window in March. And we've also invested in a global impact private equity strategy, which is the newer space that we're very excited about. So in terms of the next 12 to 18 months, like I said, there's no parts of the portfolio that I know that we're looking to turn over the next 12 to 18 months. However, we're always interested in unique ESG, sustainable or impact strategies. In particular, fixed income is more of a challenge due to the number of securities and the data challenges. So sustainable or ESG related strategies in fixed income are interesting right now.
That's great. Thank you, Joe. I'd really love to continue this conversation, but we're about out of time. I want to thank you so much, Joe, and thank you, Matt, and turn it back over to Simon.
Thanks, Amanda. And thanks from me as well to Matt and to Joe and to everyone online who took the time to join us today, and to the people who sent questions on the chat as well. I think actually we answered some of them in the course of the presentation. But we'll get back to you. We'll get back to you soon. As usual, we're going to send out a replay of today's session. Please feel free to share it with your colleagues. If you missed any of our previous webinars or want to see any of our articles, you can get them easily at our website, which you can see here. And watch your inbox, please, for an invitation to our next consultant report from the front webinar, in which we'll be speaking with David Hyman of Mercer, who leads the firm's rapidly growing financial intermediary business. Finally, you know, we always want to hear from you. Let us know if there's anything you want to talk to us about, what you thought of our webinar, other questions come to mind when it's over. Please reach out to anyone on our team directly or send us an email at the email address shown there. Thank you again, everyone. Please stay healthy, stay safe, and we'll speak to you at our next webinar.